I think it sounds quite strong. I think every time we speak, I do mention that obviously the numbers is still heavily influenced by the integration of Credit Suisse. So it is kind of tricky to compare across periods. But there's really three numbers that we look out for. First would be net new assets. That sounds that it's positive, which is good. It indicates that the initial concerns were that UBS was going to lose some of the new clients that it gained through the takeover of Credit Suisse. That hasn't happened, and it doesn't seem that it happened in this quarter. And then we're looking at the progression of the cost reductions. That sounds positive also from these results. And then finally, we look at what's happening at capital, and it seems that UBS is still actually building capital, which comes as another positive. So I think the market is probably going to take these results as a positive.
On balance, with the information that I have, it does look like a positive result, at least on the headline. Johann, you mentioned this, but of course UBS continuing to battle the ongoing integration challenges from the CS acquisition. I don't think we've seen a broader breakdown of the full integration costs yet, but can you comment on how much progress has been made and if it's on track to meet some of those original synergy targets? What should we be looking out for here if the integration is still the primary headwind for the firm right now?
Yes, I think, UBS actually upgraded its expectations for cost saves in the previous quarter's results to 13 billion from 10 billion. It's a bit misleading in the sense that it's also taking inflation into consideration that it didn't take into consideration previously. So, I think it will really be all about the language that the UBS is going to use in the presentation to give the market the confidence that the integration is still progressing smoothly.